Hey everyone, Coach Investor back to our earnings video for today. So Fiverr, they reported earnings. We're going to go over the key points in this video. They beat on the top and bottom line. Stock right now, the time making this video is actually flat. Last time I checked, when I edit the video, I'll put up the exact number. But you could have viewed this quarter two ways, right? On the positive side, it's, well, people maybe would like to have an extra income stream, right? Because everything's more expensive right now. So maybe you have something that other people would like. You can design logos, you can edit videos, etc. Offer it on Fiverr, you'll earn some extra money. On the other side is obviously the buyer. Why would I spend now extra cash on these type of services when I need to pay X amount to fill up my car? Energy bills are through the roof, etc. So there were both sides here to be considered, and I'm happy to see that this was actually a pretty good quarter for the company. Now, going forward, a lot of uncertainties as well, but looking at guidance, pretty positive. And now before we jump into the earnings report, I would really appreciate it if you hit the thumbs up button and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment, some of which might actually save you some money. So we're starting with the key results here. So revenue came in at $82.5 million, grew 11% year over year, and that came at the top line of their own financial outlook. Active buyers, 4.2 million, that grew 3% year over year. Now it's, I think, the third quarter in a row this number is at 4.2 million. Now you can view this as a positive or a negative. Obviously a negative meaning, well, it's not growing. But on the positive side, they're not losing active buyers either. As for spend per buyer, that's now at $262, grew 12% year over year. Take rate keeps increasing and we're now at 30%, and that's a big positive in my eyes. When it comes to gross margin, GAAP, non-GAAP, 81.1% GAAP, 82.8% non-GAAP, okay, to be expected. GAAP net loss actually decreased quarter over quarter, around negative 11.4 million. Last quarter, that was $41.9 million. Adjusted EBITDA of 6.6 million, also a growth quarter over quarter. And adjusted EBITDA margin 7.9%, also an increase from 5.4% last quarter. And as for the financial outlook for Q4, they do see, well, on the top line, they do see an acceleration quarter over quarter. But other than that, the range is from 0 to 8% year over year growth. Adjusted EBITDA to come between $7 to $8 million. So might be a small improvement of this quarter, but definitely an improvement from last quarter. And then for the full year, revenue stays the same a bit. Adjusted EBITDA increases again between $22 to $23 million. Now, when it comes to adjusted EBITDA margin, they say here that they are still committed to accelerating their pace to the long-term adjusted EBITDA margin target of 25%. Still a long way to go when you're sitting at 7.9%. But of course, the opportunity is still ahead, as you can see right here. So $247 billion earned by freelancers in the United States in 2021. 46% of the total global workforce are already self-employed or freelancing. 42% of employees in the US said they'd consider quitting if required to come back 5 days a week. 52% of managers want employees to return to the office 5 days per week. Now, of course, do take these stats with a grain of salt, because this might change extremely quick if we go into a recession. Then people will not really have the luxury to decide whether or not they leave, they keep their jobs, because they'll need a job to pay the bill, to feed the kids, put the kids in school, or if you have no kids, feed yourself. So those numbers are nice, but, well, let's try and look at the reality from a neutral side point of view. And now, as always, we can look at the cohorts here. So they say they are pleased that the new cohort Q3 2022 already recovered 90% of the performance marketing investments during the quarter. And that's already better than last quarter, as you can see in the little green dot right here. Last quarter already covered and a bit more. Q3 2017 is already 5 times the initial performance marketing investment. Now, of course, going up market is a big goal for Fiverr. So they say as they move up market, larger customers are looking to fulfill more complex projects on Fiverr. To help meet this demand, they introduced Project Partner. To help companies effectively manage larger projects on Fiverr Business, the service is available for projects with a minimum budget of $3,000. By putting the minimum budget at $3,000, obviously you are already automatically increasing that spending ticket, which is great. They added here an extra option when it comes to seller plus pricing to allow more sellers to benefit from the program. And this obviously increases the percentage when it comes to the take rate. So again, a big positive there. It's a lot of small little additions here that do add a lot of value at the end of the day. Talking about international expansion, it continues to be the key opportunity and long-term strategic investments. As they are strengthening their focus under the current macro backdrop, they are focusing on the internalization efforts in Germany and France among non-English speaking countries, as well as in UK and Australia that are English speaking. Of course, the opportunity is there. Now it's up to execution. Now, as always, the bigger overview of, every metric that the company is showing us. So revenue, of course, you can see that quarter over quarter, we have been coming down since Q1. To be expected, but if next quarter they do come at the top half of their outlook, then we might see an uptick here again in Q4. When it comes to active buyers, as I said, it's been a couple of quarters that we're sitting at 4.2. Again, I don't see this really as a negative, especially not in the current macro environment. When it comes to spend per buyer, that has been increasing a little bit. Of course, with the ramping up of Fiverr Business, I would like to see that number jump a bit more. Maybe 2023 would be a better year. And then the magic number is take rate that keeps increasing, and that's, exceptional. I mean, 30% is high. If they can stay like this for a while, even when the economy picks up again, I think that's going to be a big plus for us, the investors, but especially the company. Now, when it comes to gross margin, this is non-GAAP as a percentage of revenue. Yes, we're down from last year, but 82.8% is a bit of the average in the last couple of years. And continuing on that, so R&D, research and development, non-GAAP as a percentage of revenue, again, stays the same around that 20% mark. Sales and marketing, same thing here, around that 45%. Of course, that's non-GAAP. When you look at GAAP, that's a bit higher. Then if we scroll down, we see G&A non-GAAP as a percentage of revenue, again, around that 9.4, 9.5%. Still the same. Adjusted EBITDA margin did come down year over year, but did pick up from last quarter. 2021 was obviously a much better year for Fiverr, was much better year for the overall economy. So 7.9%, let's see if that can increase over time. We should probably increase when we are in a better environment. And so to conclude, it's pretty easy to conclude these Fiverr reports because, they have been pretty good, I believe so, in 2022, especially with all the uncertainty around the economy. I mean, management has been executing quite nicely. They have been, changing their own projections a bit to better fit the current market situation, which is great. You don't want to overpromise and underdeliver. So sometimes they're putting the bar a bit lower, but then they overdeliver, which is always great. And then sometimes they reiterate their projections, which means, okay, we already know what the picture will look like. So we're staying like this. Let's see what happens next quarter, and we'll work our way through that as well, which is great. Again, it's a solid quarter from the company. Of course, the stock will do what the stock will do. But as long as the company continues to operate, I'm fine. This is a long-term play. And I believe right now, the stock has taken a huge hit since its all-time highs. It's now close to $2 billion in market cap. So if the thesis does play out and the company does become as big as I believe it will become, it's going to be an incredible investment. Again, the same with Lemonade. Fiverr is a small position in my portfolio, and so I'm okay with the risk that is attached to it. Of course, do share your thoughts down in the comments below. What do you think about this quarter? Do you still own Fiverr? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye-bye.